Hey everybody, what's up? It's Ryan and welcome back to Exit Podcast. Today's special guest is Tyler Dunigan from TurnServe. How are you, Tyler? Welcome to the show.
Fantastic. Appreciate it, guys. Looking forward to talking to you both today.
Yeah, absolutely. No looking forward to it. And I got to tell you in advance, just in case I screw this up at some point during the conversation, this whole week preparing for this call, I have called you Kyle Dunnigan a million times. There's a comedian running around right now, Kyle Dunigan, and he's like top of mind. And so as I've been preparing for Tyler Dunigan, I've been writing Kyle Dunigan everywhere. So if I call you Kyle a couple times, let it slide.
He was on Rogan, right? Is that same comedian?
Yeah, he was on Rogan just the other day, and yeah, he's been doing stuff for a couple of years. But anyway, so I just saw him the other day on Rogan's show, and then I was looking at our notes for this, and I was like, oh crap, this is gonna be a problem. So anyway, I'm just putting it out there. So if there's anything wild, know that I still mean you, and I care about you, and I'm here for you. But I may call you Kyle.
Well, Tyler,
see, he almost did it.
Yeah, I almost did it. He almost got me there. Ryan's done a lot of research, and I have to be 100% honest. I'm right in the middle of a move, and I haven't done any. I don't know anything about you other than your name. And as you can see, I'm still in my work clothes, so apologies for that. But why don't you tell us a little bit about yourself and who you are and what you do? We know you're Tyler, not Kyle, so let's go from there.
Yeah, not Kyle. Not nearly as funny as Kyle. But yeah, so in a nutshell, guys, I'll give you the quick answer is top level. I'm the CEO of TurnServe, founder, started it. It's a platform brand. I started a bunch of small companies underneath of it. We service some of the largest property managers in the U.S. It's my playground, as I call it. I'm able to start companies, launch them, and I have an embedded client base day one. So from services to products, solutions, software build outs, you name it, we get to have a lot of fun. That's face value. Tyler at my core, just, family man, enjoy classic cars, hang out with my family, build cars with my dad. I have an 11-year-old whose life is consumed around basketball right now. So we're traveling 3 games a weekend kind of vibes, homebody, foodie, obviously, all the above. So just outdoors, a little bit of fishing, I collect sports cards. So I'm always busy. And end of the day, I just always refer to myself as just a relentless entrepreneur because I wouldn't know what I would do otherwise. I would just do this for free. So end of the day, I'm doing exactly what I've always wanted to do.
Yeah, it's a good gig if you can get it. So, and just in case it wasn't clear for people, TurnServe is, as I understand it anyway, is in and around the real estate industry. So when he's talking about managing properties and things like that, it's multifamily residences and things like this that he helps people manage. So, and we'll get into that a little bit more. So let's, I guess, go back to the beginning a little bit and talk about your entrepreneurial journey. Talk about just sort of the come up. I mean, you don't start out as CEO somewhere. We have to have done a little bit along the way. So also with that sort of tenacious entrepreneurism or entrepreneurialism, let's, you have to have touched a few things along the way. So let's talk a little bit about your journey, maybe who inspired you or why you got into business in the first place and sort of how we ended up here.
Yeah, of course. So I am fully convinced that at least a handful of them, but entrepreneurs are born. I was just born wanting to do something and just, couldn't sit still, always wanted to be involved, be a part of the next big thing. I just always like to stay active. And so, when I was young, as cliche as it is to say the story of the lemonade stand salesman and whatnot, realistically, I drew comic books as a young kid and I tried to sell them. And I lived on a dead end road with no traffic. So that was a good start. But, just my dad had a company when I was younger, and some of my earliest memories were of him just doing the coolest things, doing some remodeling and whatnot. And I think what got me was, so I'm in Cleveland, Ohio, and pre-Guardians transition, we had the Cleveland Indians and a Hall of Famer named Jim Thome. He was in Cleveland. My dad was going to his house to do his kitchen remodel, and I just thought it was the coolest thing in the world. And so that just stuck out to me. And I think that left an impression on me, not because it was Jim Thome or anything like that. That part's cool, but just seeing my dad get up and do things like that every day in and day out, up at 5 a.m., home late, those kind of things. I was just always so proud of him. I think that left an early impression. Fast forward, I got involved in the house flipping space, and I started off with handyman services, not knowing anything about it, working for a couple real estate investors. I ended up investing alongside them after a little while. And then talking to a mentor, I wanted to do something a little bit bigger, a little bit more strategic, a little bit more, predictable. And he encouraged me to get into multifamily apartments. So moved away from the single family stuff into the apartment industry, did some consulting there for a couple of years to learn the ins and outs of it. And then I just jumped ship and went full fledged into my startup in 2018, and parachute in hand and all. And that was it. So, and since then I've been involved in probably, I don't know, 8 different companies, from big projects to big organizations. And even today, like before this call, I was working on what's next for us and whatnot. So just kind of in my fabric of, I'm always curious about, is there a better solution? Is there a better way of doing things? And I think that just like insatiable curiosity for me is what drives me, to be honest with you. And I don't like the status quo. I if somebody tells me I have to do something a certain way, I always like question like, well, is that really the best way to do it? And so I always just try to put my head on things and see what comes out of it. But summarized version, that's my quick, grow up, so to say, and some early inspiration and just kind of an internal drive that keeps me going every single day. Just every single day, I just have to be doing something.
So you obviously have your startup right now. Do you still do real estate on the side, or do you still have multifamily units that you're?
So no, for a while I did. And because the way I did like my handyman services and whatnot, I ended up bartering, instead of like doing like a $70,000 remodel, I would do it for 50, but give me 25,000 worth of points in the deal. And so I had a couple of duplexes and whatnot. Those have phased out. Those have been sold and whatnot. And now today, because all of my focus is just on TurnServe and all of our subsidiaries, I'm more so a REIT investor with the real estate side of things today, as funny as that might be. But no, I completely just went one dimensional to focus on multifamily.
Okay. Break down TurnServe for me. What exactly is it? How does it work? How does it help me?
Yeah. So I'll preface the art of a turnover is just simply put the processes between somebody moving out and somebody in, just a fancy way of saying it, in an apartment complex. So when you guys are driving down the road, look at the next complex that you guys see. If there's 200 units in that complex, 100 of those people are going to move out every single year, like clockwork. And that creates a repeat kind of structure for us. Holistically, TurnServe is a one-stop shop for property managers to call on between renters. So these property managers will call us. They'll schedule their move outs with us the next month or whatever else it is. We pre-schedule our services where our painting, our flooring, our bathtub refinishing, you name it, we get it queued up. And in that small window between move out and move in, we go in and make the apartments look brand new. And we essentially flip them for the next renter. That's the biggest segment of our business. Other aspects of it, we have a lending option for some of our clients today. We're getting involved into deeper things with software and whatnot. The 1,000-foot vision is going to be, we are just an embedded partner for property managers to call on for solutions, from a platform to access insurance and IT needs and everything else, and supply on the other side, and then the services. We just started with services because we wanted to get into the buildings. And I think that we have figured that out. We do it better than most at this point. We've scaled it into 5 cities today and growing. So we have our systems down, but now we just want to build on that. But in a nutshell, we are just a quick, convenient solution for some property managers to get their units rent ready between renters.
Okay. So talk about your first 6 months of launching and finding workers to actually do the work. Were you actually going out and doing it yourself? Because I see that happening a lot. And getting your clients and everyone happy, and then also having the workers and having them happy, that's hard work, and keeping on top of everything, on top of trying to run the business is hard.
Yeah. It's almost mind boggling. And when it would make me think back at the time, little flashes of PTSD pop up. But realistically, yeah. So before I launched it, I was in corporate America, right? Because I was doing single family real estate. My mentor told me, learn about multifamily apartments. I didn't know anything. So I started consulting in the space to learn a little bit about it. I ended up running one ultra high net worth individual's whole portfolio for him in my corporate America venture. And we ended up firing his third party management company. And I was the person that started his next management company so he can in-house it. And so I had this deep understanding of what went into it, from not even just a service level, but the accounting, the legal, everything else and whatnot. And I went in to really do that transition between management companies for that gentleman. And towards the tail end of it, it went successful. All of the numbers were great. They were happy. And I had an option to where I could either kind of stay put and be the director for this one person and all of his assets. I managed around $250 million worth of real estate for him. I could have stayed put there and see what happened and, rode off and eventually retired one day, comfy job. But I was trying to solve problems that I was having in that time, and I couldn't find the vendors for my own portfolio at the time. I couldn't find an enterprise solution and somebody to show up. And so to answer your question, where I'm going with all this is that first 6 months, I was kind of already doing some of those things for my own portfolio. And I eventually talked to the owner and I said, hey, I just have this itch and I just have to take a swing at it. I got to see what happens. And he essentially said, like, you could do it. But if something happens, you can come back here if you want to. Okay, perfect. Fast forward, unfortunately, that gentleman passed away a week later. And so my safety net kind of went away. And so the first 6 months, I was literally the only technician for TurnServe. My significant other was with me, and we were working in apartments from 6 in the morning till 1 in the morning, getting them ready and all those kind of things. And eventually she told me that she would no longer work for free. So I had to start paying her. So she was kind of my first employee, but really it was me. And I would say for the first 12 months, I was really the only person. I was doing the accounting. I was doing the services. I realized the model worked very well. If you get 1 or 2 clients, you get a lot of work very quickly. And so I was trying to get people to show up. I remember, I would call anybody that I knew, my brother-in-law, hey, call your friends. I just need you guys to paint. And I would just pay him cash. I don't even know if I made money on the first, few units I did, because it was like I would buy pizza and all these things and whatnot. But getting people to show up was a challenge. And then I just remember, like, eventually, you have enough clients. It's a chicken or the egg, right? Like, do you need the clients first? Do you need the workers first? The reality of it is it's never going to be perfect. And so first 6 months, it was me, a couple friends that were helping me out every now and then, people I was begging that would just show up and whatnot. And then eventually we had enough work to where I could start hiring people. But up to that point, it was in one aspect, it was difficult, but in the other, it was very beneficial as well, because when I was being that technician, I was timing myself. I was seeing how long something would take. I was teaching myself how to do better and whatnot. And I was building out my early analytics. I didn't even realize it, the KPIs and whatnot. But that was a pretty tiresome first year, with legitimately like 18 hours a day.
Well, what I like about your story, though, or one thing I think is important about it, because we do talk to a lot of founders, but we talk to a lot of founders that are more on the tech side. And not to say that, it isn't hard work, crunching, programming 10 hours a day or whatever it is, but it's different than somebody who's actually got their back into it like this. And so I appreciate you sharing that story and just sort of some of the struggles you guys dealt with, but also just kind of this transition, I guess, from solopreneur to entrepreneur. And so maybe that's kind of where I want to focus next, which is, you talked about, at first it was friends and family. And I think that's pretty common for a lot of these kind of businesses. They rely on their brother or their friend or whatever, and they kind of work on things. But as you started to move into getting, paid people, how were you vetting people? How were you finding people? And then how does that scale, I guess, to sort of the next phase of business? At least with a lot of companies, I think the metric is sort of like 1 to 5 and then 5 to 10. And, like these are the numbers of people we're looking at, so when you started transitioning out of, 1 to 5 being you and your friends and family to 5 to 10, 10 to 20 and so on, how do you make that move, or how did you, I guess, know how to do what you did to make that pivot?
So I fumbled through it. In hindsight, I would have done everything different. The only real saving grace that I had at the time was, one, I got introduced to, a good lawyer turned friend, that kind of gave me general direction. Hey, like, here's the forms you need for employees, like from an I-9 for some people to W-2, like on and on. Right. We kind of lucked out because I got lucky finding a couple people early. And I remember, I think it was just a simple like posting on, I don't even remember what it was, monster.com, maybe Indeed or something like that. And I was like, I think I'm going to put a job posting out. And I remember posting it feeling like so like imposter syndrome, because like I'm really hiring somebody right now. And I remember sitting down for my first interview with somebody. I was more nervous than they were. Like, they're just like there for a job interview. I'm like, hey, how's it going today? I'm like scratching my neck and things like that. But those first like 10 hires, that's where you cut your teeth. That's where you learn your processes. It was all manual at first, we didn't really have employment agreements. And then I realized I should probably have them the more you get burned in certain situations and whatnot. And, just kind of just put it together bit by bit. I'm sure there's better ways to do it. There's probably less painful ways to do it, but I would just get any documents that I thought that we might have had to be compliant and just I did the interviews, I would onboard them. And then I was also the manager and the trainer and everything else like that. And eventually, because of the way we started, everything that we have done, I've always built it with scale in mind. And so we try to record everything we do. We make it a system, make it a process. I always try to work myself out of a job, as funny as that sounds. And eventually we had that process. We had a part-time office admin that started doing my manual processes for me. And then she had the greatest idea in the world of saying, hey, we should probably get a software to do this instead. I was like, oh yeah, that's much better than my idea. And, then we eventually got on a platform, shout out to Gusto or Gusto, however you say it. And it's just a one-stop solution where you can onboard employees and get them going. But that first 12 months, just from trying to negotiate pay to how do you handle somebody not showing up for the third day in a row, all these mom and pop vibe things, eventually the pain just makes you take action and do things a little bit differently. Fast forward to today, we have over 60 employees and we run a lean ship, and now we have things that govern things before they happen. Example, a handbook, which if you would have asked me 5 years ago to make a handbook, I would have said, call somebody else. I have no idea what you're talking about right now. But today we have those things that spell out how we operate, how we handle things, from PTO to you name it. And the biggest thing that we have done, and the biggest difference for us, is we actually work with an executive / life coach, and all my employees get access to this person. We all agree upon things like what's our purpose, and what's our core values. An outsider like, me 6 years ago, I'm like, oh, that fluffy stuff doesn't matter. Like, let's focus on the work. You realize at the end of the day, that's almost like all you have to really rally behind as a company. Because if your services define you, like if my slogan was, I'll paint your walls, or hey, come work for me, you can paint my walls, like something like that, it's not going to stick. But when you have like a general thing that just makes you guys stay together, that was probably the tipping point for us, and what took us from this area of let's try to get workers in here to all of a sudden we're getting job applicants from some of the largest Fortune 500 companies around us, which was surreal to me. But it was definitely an evolution. There was a lot of learning along the way. I've made every mistake known to man, but at the end of the day, I looked at it. I want to frame this to where we could delegate this process out if we had to in the future. And we were just constantly building that out.
I love that. Yeah, it's funny how when you go from, one or two employees or friends and family to, your first monster ad and having the first employee that's actually like relying on you for everything, and they're taking as big of a risk coming to work for you as you're taking a risk on them paying them a full-time salary. And so going from that first employee to going to 10 to 20 to 60, that's when the HR nightmare comes into play, and the handbook actually makes a big difference because, everyone hates the dreaded HR person. You got to shave for the day, or you got to do this, you got to have that, and it's a nightmare for everyone, but it's a necessity. It's like without those rules in place, without the guidelines saying, hey, if you miss a third day, you're fired, you're out. There's no ifs, ands, or buts. It's written in the policies. That kind of not only protects you, but it gives them a clear understanding of what's expected and what's required out of them. And by having those outlined, it makes it where there's no, gray area. It just kind of makes it where they know what to expect and you know what to expect out of them.
Absolutely. So. That's spot on. And you said it, you said something I want to touch on for a second. Somebody taking a risk by coming to work for you, that mentality kind of like stopped me from hiring somebody when I actually needed them at first, because I could deal with me kind of having like job uncertainty and whatnot. Like, I'm great. I'll figure it out. Like I'll make it work. I could build a parachute on the way down, those kind of things. But I remember like trying to convince somebody that was looking for like a full-time job when I would interview somebody and they say, "Hey, I have a really stable job, I make good money, it's a dead end, I'm miserable, that's why I want to come work for you," and I'm like, "Yeah, but it's a steady job, right?" I found myself almost talking them out of coming to work for me because I was so paranoid about pulling them off of something stable and steady. And and even to this day, one of the biggest things I stress over is making sure that we have a really good place for our employees to work, because it's not just about them, it's their families. It's, I have 3 sons of my own, and I put myself into their shoes. Convincing somebody to take that leap, you got to be pretty sure on that. And that, I remember that being a difficult thing to overcome. But today I'm proud to say, like, we've kind of turned that corner, and now we're getting more so like career-based applicants, so to say, versus like gig-based applicants. So we definitely turned the corner on that.
Yeah, I like that. So one of the things I want to talk about that it seems to come from your experience, and I think is really common for a lot of people, is basically you have a trade and then you go into business in your trade, right? In my case, I was a graphic designer, and so I started a business doing design and marketing. In your case, you worked, in real estate and property management, and then you went out and you started a business doing real estate and property management. But the one thing that you've done that I think so many people struggle with is transitioning out of the spot where you just created yourself a job and moved into something where you're actually building something bigger than yourself. And we've talked about it a little bit as far as it pertains to people here, but I want to talk to you about it in sort of frame it in and around the world of scaling. And so, the information that I had on you said that basically you've got multiple brands at this point that have over about 18 months or so jumped up to, 7-figure businesses at least. And, and most people, especially tradesmen that go into a business for themselves or whatever, will almost never meet that mark. Plenty of people will, but a lot of people will not hit a 7-figure mark.
Sure.
And so I wanted to talk to you about that and just talk about sort of this rapid scaling. One thing that's clear from the way you've been talking so far is just sort of your intentionality. From the beginning, you had this wherewithal that you were, how can I do this better? How can we do this faster? How can we make more money on this, et cetera? All the things that I guess are sort of business minded. But, I think when you actually sit down and you have to do those things or figure out how to scale rapidly in a way that isn't reckless, but that you can actually go and find business and stay, or have, I guess, fuel coming in at the rate that you're looking to grow. I wonder if you wouldn't just sort of talk about that, just sort of, because I think that that's maybe the next big transition. You start getting a bunch of people on board, but now you're spinning out these different companies with different specialties, and so how are we grabbing those and scaling?
Yeah, absolutely. And for reference there, so there was a span of a few years ago, within a span of 5 years, we launched 4 multi-million-dollar brands, which is kind of surreal to say, because I remember how hard the first year was to reach that in the first one. You said a key word there. Intentionality is probably the biggest one. And when I started mine, I started with the end in mind, and that was advice somebody had given me. And I actually read 2 books before starting my companies. And one is simple. It's called Finish Big. And that teaches you just like legitimately starting with the end in mind. And it helps you frame things differently. Normally people don't think about starting with the end or transitioning to that or anything else like that. But when you kind of build for that up front, you aim for it, it makes things way easier. Also, another book that helped me early on was and everyone has heard about this book. We use a hybrid version of it. It's called Traction. And that book really spells out, it's the entrepreneurial operating system, and it's really the inner frameworks of a company, right? But fast forward, even beyond those things, just having those books are worthless. They can become paperweights unless you actually practice those things. It goes down to mindset. It comes back down to mindset of, I mentioned earlier, when I was that first technician, I was legitimately tracking how long it would take me to do something, and I wasn't rushing it. I wasn't doing it slow. I wanted to know my averages, right? And I wanted to build a framework. I wanted to build processes out, because the only way I knew how to scale was to replicate myself time and time and time again. And I could only do that if I had systems to build that out on. And so really where I think I made probably the biggest positive change for us was trying to just really inform those first employees, here's the job I want you to do, and here's how you should do it. I was so paranoid about getting somebody over and that not going well. I was literally trying to make their job super, super easy. And so that's why I built it with the fundamental blocks in place, so to say. And then fast forward, I remember early on you think of like, oh, that's so far down the road. I can't imagine, like, why do we need to talk about AR management? Why do we need to do this? Why do we need to have common sense about HR? Like whatever it might be, it happens way quicker than you think. Things get rolling, and then all of a sudden, like your business is full steam ahead. In a matter of 2 years, your whole landscape could change if you're built for scale. And so for us, today I run with open books. Every key metric is on display, so my team can kind of look at it and we kind of gamify it. Here's the goals, et cetera. Everyone knows exactly where the company's at because our goal is to sell this thing in the future. And even if we don't, it's still a common goal to have because when you're built for that, it's going to run really well. And to take that to a next step here is a lot of the times you try to find employees and you want to pay them hourly or salary, and that's it. Well, today's world is a lot different than that. There's a huge shortage everywhere. It's hard to find people that are great that you can hold on to for a long time. And so one, you have to really offer a great place to work. But two, we actually offer something called phantom equity to all of our managers up. And what that means is if there's an event, an acquisition, sale, something like that, they're going to benefit from that as well. And so where I'm going with all that, we talk about scale, we talk about all these things. There's not one single lever to pull when it comes to how do you scale well, so to say. It's a combination of all the small things. It always comes back down to people and systems every single time. And so when you can incentivize those things and align interest, that's when scale is possible. You use the plumber analogy. A lot of great plumbers in the world that might not ever hit $1 million in revenue. They might not want to, but for those that do, they might need to learn a new skill set or reshift their priority in their focus, right? Trying to take their skill set and teach it to others and replicate the results. I'll end this thought with this. We actually have an exercise that we do with all the new businesses that we launch. We test. We do a lot of R&D. We do a practice where we want to be able to communicate. We want to be able to sit down on a Zoom just like this, and we want somebody to try the system or the process without us having to verbalize it. And if we can go through that entire process and it goes closed loop, we know that it's going to be successful. But if we do it and I have to say, hey, Mike, don't forget to hit the red button today or whatever else it is, it's broken. So everything we do, we test for continuity. End of the day, all it is a continuation of data collecting on itself and currency. And if you could win those two circles right there, everything else will come together. In layman's terms, if you could show somebody how to do something and get the results you want without having to tell them to do it every single time, you're going to win. If not, you're going to have a job forever.
Yeah. No, that makes 100% sense. I love the phantom equity part of that incentivizes people to actually give a crap. Like lots of times in the trade union, you'll get a guy that just is looking for a paycheck, but you get someone that knows that there could be a big reward at the end of this tunnel. They're gonna want to succeed and want to do a good job just because of that. And your thoughts on the having the software where it's communication free and working through that with the client, where if you go through the processes and you figure that out where you're out of the equation, the software's working, that you don't have to go back and do a bunch of steps that you have to manually insert yourself into. And that eliminates a lot of work on your end. Do you ever get a client or a property that you just say no to? Because I could see a lot of these old apartment buildings where the work is not worth the reward. Do you ever do walkthroughs beforehand before saying yes and signing the contract with them?
Yeah. So a lot of the times, yes is a short answer. And if we could add value, we will say so. If we can't add value, we will say so. Because of the nature of our companies, our businesses, it's all B2B reoccurring, right? We don't need 1 million relationships. We need 1,000 to scale nationally, right? And so we try to be really connected with these management companies that then manage thousands of apartments underneath of them. But to answer your question, there are times where we will look at our ideal client, which we have zeroed in now. So like we look at things like the age of a complex, the need, the scope, like what phase, what type is it? Is it market rate? Is it affordable? And we've dialed all those things in. And we didn't start by knowing those. We kind of got slapped in the face because exactly what you said. Hey, do you walk a building and never say no to it? When you walk a certain type of property, 10 out of 10 times you can't provide value there, you eventually just kind of cross it off your list. Like, well, we know that we can't do any, I'm making this up, workforce housing today or this year because here's why. And so we kind of like, we narrow in our scope. But I would say probably the thing that detracts us the most from adding value to somebody and doing work with somebody, as top level as this might sound, is because of cash flow. So property managers in these complexes, they are always trailing 30 to 60 days just because the nature of rents and everything else like that, right? And for us, we pay our employees weekly. We offer a good incentive, a good service, you name it. Well, a lot of these complexes, because either they were purchased not great, they had tax incentives wearing off or things like that, they just can't cash flow any longer. And there's things that we had to implement, like credit limits or like pre-credit checks even from certain complexes. So to answer your question, yes, there's times where we will not do a service, but very often it's not commonly not about the actual trade need itself. It's mostly about the higher level infrastructure, does it fit well with our capabilities and whatnot. One example to close off that thought, some of the affordable housing, that whole sector, there's a huge need, right? There's a lot of political things that go into that. And there's a lot of good people that need that sort of housing. Well, because of the way it's regulated and the steps that, there's so much red tape, getting funding is truly tough for a lot of these properties, even to request it from, governments or what have you. And then that in turn hits the vendor side of things. And then either the lack of good vendors or the benefit of having great vendors comes full circle, and the residents or the tenants will feel that. And so we don't ever want to go into a situation where we get 20% through a project and we have to pull off because, funding or something like that didn't happen, or safety or who knows. But yes, we have pulled off, and there's things that we just won't do. But a lot of the times it has very little to do with the actual service itself and more so about the whole setup.
That's interesting. I would think it would be walk into it and realize that there's, every unit in the entire place needs a new tile job or something that's incredible, like just
Sure.
Astronomical. But the actual cash flow purpose of it, that makes complete sense. Because I mean, if you're coming in and your ideal client is, just a quick paint job, maybe do some carpets, quick turn and burn, and you still get that cash flow coming in, that makes complete sense if that's like your ideal client, and the ability to pay you, and then the fact that like learning that you walk into an apartment complex, you think they got a lot of money, but then realizing that they don't have the cash flow, that's probably a hard lesson to learn. Did you have a situation that kind of actually put that first and foremost, where you did a lot of work and never got paid?
Yes, I have horror stories, Mike. So some of the early clients that we had, not all, because we have great partners, but some, when you're brand new, when you're a newborn company, you will literally partner with anybody. You just want the chance for somebody to spend some money with you, right? You need that revenue. And so there was times where we really just jumped into things, and then right away we're like, oh no, like this does not feel well, and today, luckily we have an AR management, a whole division, so to say, to kind of help those things. But there's been times where we completely just pull the plug on something because we can tell right away. Look, we don't like to run our team members across, the city, and all of a sudden the building's been locked for the 6th time in a row. There's lack of management, you name it. Quality of life is super important for me, my companies, and my employees, because that's end of the day, that's what somebody feels. Example, if you look at our offices, you hear me talk about flooring and painting and bathtub refinishing. You would think it's more so like, you probably think like a construction site, right? Muddy boots and drywall dust and whatnot. We look more like an Apple store than anything else. And the reason why I bring that up is because that quality of life thing, it's not just about my leisure, my office, temperature controlled, et cetera. It's also how some of these clients have treated either directly or indirectly some of my team members and whatnot, and kind of derail that quality of life sometimes. So there's been times where we pull the plug after the first service, and I know it sounds harsh, but at the same time, there are a couple early signs where we just know right away, like, oh, hey, we can't add value here. It's going to distract us more than anything else. And look, there's times as well where our average, we just changed our net terms, by the way, to try to combat this. The cash flow issue in that industry, it's normally you get paid in net 30. So you do the work, you got to wait 30 days to get paid. Well, that's more so like a suggestion for versus like an actual like deadline in this space a lot of the times. But there's times where we saw somebody's balance creeping up, we quit doing work, and we kind of just knew right away, like we have a general guideline of if we're doing services for somebody and they're a little bit past due, that's okay as long as we're like active in that building. But if we are constantly just like collecting money, and they'll hire us in bursts, like, once every 4 months, they want us to come in and do $50,000 worth of work for them. But then we spend the next 6 months like trying to track it down. It's just not advantageous for anybody. So a lot of times we have pulled off because of a lot of aspects of it. We've seen about damn near anything and everything imaginable at these complexes by now, from unworkable conditions every now and then, which might go back to your first question a little bit. There are times where we can't service and whatnot because of conditions. Mostly they are around utilities not being on, or no clean out was done, or infestations and whatnot. But we've also pulled off because of more so because of the cash issue.
Yep.
Yeah, that makes a lot of sense. So I want to pivot back to just sort of your mind as an entrepreneur and talk about sort of, I guess, tactical entrepreneurship. I want to talk to you about your current approach to like picking ideas or deciding where to go next and branch out. Like it was an obvious maybe dovetail into your life when you started TurnServe. You were already kind of doing this kind of work and then you moved into it. But as you mentioned, you've spun out a bunch of brands and stuff since then. So what's that vetting process? What kind of frameworks and filters or things like that are you keeping in mind as you're making these decisions? To, I guess, kind of hedge your bets and make sure that the thing that you're going to start throwing money after is actually worth doing.
Yeah. So for us, it's always synergistic. And what I mean by that is it's within arm's reach. And example, when we launched our refinishing product in company, we only learned of that because we couldn't paint a unit, and there was another vendor doing that service in there, and they were doing it pretty poorly. Like we realized like the industry was outdated. They're using harmful chemicals and whatnot. And I hung out and just talked to the person and said like, hey, like, what are you doing? I learned about what he was doing. So a lot of our kind of like initial launches, they're because we ran into those things in like real life, so to say, and like, hey, we could probably do this service a little bit better. Let's see if we can framework this out. So we don't really have I have a lot of friends that have a lot of ideas and whatnot, but they'll pitch me on like, oh, you should do a roofing company. Oh, you should do a parking lot striping company. And I'm always like, if it doesn't really fit where we're at, like inside the units, like there's so much opportunity in that space. We're just going to focus there. But then you follow kind of like the course that I mentioned earlier, like you follow data, you follow the currency, right? The reason why we're launching financial-based services in the very near future is to help out with that cash flow issue that I was explaining. And hey, our clients deal with this. It impacts our companies. If we could solve that, we could both win. Same thing with our refinishing brand, same thing with our flooring, you name it. That's kind of how we ran into these things. And really just things within arm's reach. A lot of our friends around the industry, they're in similar companies or what have you. And sometimes they'll like drop an idea. So mostly I would say 90% of it's just because like we see it every day and like, oh, we could probably do this better. So they kind of naturally hit our radar. I would say 10% of them are just because I binge YouTube way too much and I'll see somebody doing something and it's a cool company. I'm like, that's fascinating. Like, I wonder if there's an application for this. And there's no rhyme or reason for those. I probably look at 100 different ideas before I even mention my team. I'm thinking about one. And so that's just me. Like when I go home, like it'll be me, the kids, and I'll be doing my thing. I'll put my kids to bed, spend some time, with my wife and whatnot. And then after she passes out, I'll just be sitting there binging YouTube or some podcast or what have you. And I'll just hear somebody and I'll start researching it. I'm like, oh, could this fit? So I'm kind of always on that subconscious outlook for something that fits, so to say. So getting the idea that that's how that's done, and then actually testing it to see if it works, because at the end of the day, it's about the metrics, right? I have so many ideas that I can't implement because they would lose money, right? And so just testing the unit economics on those things and really breaking them down into simplistic action steps. For us, everything that we have ever launched is in its simplest form. It starts off, say, at level 10. We try to cut that thing down to where it's at a level 2. We have an expression, and it's not to throw shade at any 8th graders here. You guys are awesome. But we always try to do something to where if we build a system, we want an 8th grader to be able to come in and run it and use it and all those kind of things. And so for us, a lot of the times these overly complex systems, these very clever outcomes and whatnot, they are built off of just simplicity stacked on top of each other. And so really that's how we test things. And I'm still, ironically enough, I'm still technician number 1 a lot of the times in a lot of these new business ideas that I start. Even though I might have 60 plus people and I have way more capable people than me, I'm just there out of curiosity because I want to time things. I want to test things. I want to see what we could bill for. So combination of that, I'll do a little bit of market research, call around, what do you guys pay for this service here? And there's better ways of doing that. But for us, it's not overly sophisticated. It's just things that hit my radar or interfere or impact our day-to-day. And I want to make it a little bit better.
Yeah, and I think that that's maybe an interesting thing to call out, because I think a lot of people might bolt on some of these things just as a service that they sell. But what's interesting about the way that you're doing it, and you can correct me if I've got the vision wrong, but it seems to me that basically these complementary businesses are the things that you're encountering just as a part of your day-to-day business that ultimately go on and become their own vertical or become their own business. It gives you an opportunity, and maybe this is where, this is very clever, which is it gives you an opportunity to go back to these same customers who have different problems, right? So, sort of the phrase, going back to the well, right? You're going back to the same group of people who are already treating you well. And not only does this give you an opportunity to serve them better, right? Because you've built up these new businesses or these new ventures that can support them in a better way, but you're also the guy making those referrals, right? So you're getting them, or I guess earning more trust or more capital with those people in terms of, you can rely on me. The people I'm going to refer you to are going to be good. And we do that service, and you can trust me because we've been good for you. Yeah. Right? So there's sort of this cycle here that I think is really clever or really smart, like back to our metaphor of, the plumber running his own plumbing business. If you're the plumber, but you recommend the electrical contractor and you recommend the framer or whatever, and everybody's great, you'll start to build a reputation for that. But if you ran the framing company and you ran the electrical company and you were the plumber, then you're kind of triple dipping, so it actually is a pretty clever strategy, I think.
Yeah, and that's exactly what we do. I would say if you look at our balance sheet and you look at us as a company and whatnot, I always say our most valuable asset is our customer base. They're reoccurring. They're in high demand. There's a high level of trust with us. In most cities that we're in, we have been in 90% plus of the buildings around and the complexes and whatnot. We have such good relationships on, example, we saw it this morning in real time, hey, we need to grow painting in this city, call a couple of our contacts here, see what they got down there, and sure enough, we made 3 phone calls. We got 3 submissions for paint units, and that's going to take off. And that's such a big competitive advantage because it takes things out of being hypothetical and wishful to actually tractionable and impactful, because we're already in the buildings. We're doing those things already. And everything that we have launched has been with clients that we already do life with. And I'll normally barter with them a little bit to make it easy, right? Hey guys, we want to test this out. If you let us try this here, we'll give you a concession or credit on the other side of things. And they love it because they get free services from us within reason while we're in our playground phase, so to say. But also, our sales team, our AR team, our upper level leadership team, we're able to really roll up all those costs to one point, and we're able to really just kind of offset, individual costs because of the way, my painting company, my flooring company, my refinishing company, they all roll up to the same corporate entity, so to say, where our AR team sees that entire portfolio, so to say, versus I need an AR team for this company, and that company, you name it. But it all also comes back down to the scale and how it's set up.
I think one other thing that's kind of clever about it too is by breaking each of these things, and they are kind of they are independent businesses. Like these easily could be, you could just be a roofer or just be a flooring guy or just be a refinishing guy, so, I mean, they could be a standalone business. But what I like about the idea of breaking them out is I think some people go kind of the other route where you're an all-in-one, one-stop shop behemoth that just does every living thing. But eventually you kind of lose your ability to specialize, right? You've become the place that does everything instead of, having any kind of specialization. So even though these guys are all related or, all fruit of the same tree, so to speak, it's, I think, different or unique in that you've got these verticals, but you could also, I guess, cleave them off or sell them or, do whatever else. And it's not going to impact sort of your core bottom line. Where if you're, GM and you decide you want to start selling electric cars, well, now you're lumping electric cars into your thing. And if electric cars go really bad, now you're affecting the stock price at GM. Yeah. You're not affecting, where if you just, you're GM, but then you have GM2 and you run your little electric company over here and it fails. Okay, well, it fails, but it doesn't affect GM.
Yeah.
And, so I think that approach is kind of clever. I guess, is there any real insight there in terms of like the strategy or deciding to go that route versus just making all of these TurnServe operations?
Yeah, so you said it well. You said the term specialize, right? And that is literally at our core. That's what we say. It's hard to make a big impact when you generalize, but when you specialize on one thing, you could really go far with that. And we break off our company. So every brand that we have it's called a subsidiary of the whole company, right? And so we have our overhead company. Then underneath that, we have literally subsidiaries for each one. They all roll up, but they're all compartmentalized. And the reason why we do that is twofold. So, when we launched our commercial division, we didn't want it to interfere with our in-unit painting division because we're so process-based. We didn't want to tell that technician in the one, hey, start doing things a little bit different over here. And so instead, we just found a brand new group to come in and run the other vertical, so to say. And we've done that along down the chain, so to say. And the reason being is because, one, liability and all those fun legal things and whatnot. But two, it's just about the value as well. Keep in mind why I started the companies was to eventually sell them one day. And so I structured it a lot like a private equity company would almost, to where they have their core companies, they have their subcos and all those kind of things. That way we could plug one out, we can plug one in, we can get investors for one of them instead of having to do it for all of them, so to say. It just creates some options and flexibility and puts us in a position to win no matter what might happen.
And
yeah,
it's funny you say private equity too, because that's exactly what I was thinking. It was a model like that where you've basically got sort of the core unit that runs the business, but then all these sort of subsidiary businesses around it. But that ability to sort of bolt on, bolt off, hey man, we just want to get out of flooring altogether. You can be done with flooring, or hey, let's sell this flooring company off to somebody. You're creating assets and doing all those things, but that flexibility to, I guess, manage each of them from a central area, but each still have sort of their autonomy or their specialty, I think is a really clever approach for something like this.
Are you running books for each independent one, and then how does that work? So, because if you were to, like, say, want to just sell the flooring side of things, is that a possibility based off of the income structure of just the flooring, and then that reports up to the top layer? How would that work?
Yeah, so for each division that we have, each vertical, you name it, they all run independent books, but they roll up so there's a consolidated view. So that way, TurnServe, just the way they're structured, I could look top down and see collectively how we're doing, and then I could really get granular. How's Liquid Liner doing? How's apartmentflooring.com doing? I could really get granular with these things. And so that just comes down to good accounting, and it also matches with systems and whatnot. It's actually way easier to do than not. So it's when you set these things up, and like for us, we don't offer a million different services. We only have a handful per company, so to say. That's only like 10 line items in QuickBooks or Method or whatever else it is that has to roll up, that has pricing attached to it. If we generalized and did everything under the sun, that would be a complete just bird's nest of issues and whatnot. But because our strategy and our setup, all those things are able to roll up meaningfully while also capturing subsidiary level financials every step along the way.
That's awesome. That's really cool.
Yeah.
Yeah, no, I love that. One of the things I wanted to talk about, and it's a little bit more, I don't know, hypothetical, I guess, but what do you think, in your experience anyway, is one of the sort of most overlooked growth levers that founders are missing right now? So is there, starting their own companies, whether those are service companies like in your realm, or if, whatever they might be doing, Is there something in particular, in your case that you would call sort of your secret sauce? And, this might be the way that you deal with customers. This might be the way you find new business. Is there some lever that you would say is sort of overlooked by most founders?
Yeah, I would say it comes down to perspective. A lot of us build services and solutions based off of our capabilities versus our customers' needs. And even though we are super familiar, like, oh, serve the customer, customer's always right, all this kind of things, we tend to naturally build things from our core competencies, right? We build it this way, like, hey, here's how our clients have to use us. Here's how this has to work. You name it. Instead, frame that. At the end of the day, you might have a service, you might have a supply company that whatever it might be, a software. You have to realize at the end of the day, you are bottling up convenience and selling that. And if you take away anything from that convenience, you are hurting yourself. Even if it's super flashy, sophisticated, makes you feel very clever, you get on podcasts, talk about it, look how smart we are. If that compromises your customer's journey, it's not going to grow as fast as it possibly could. And I think a lot of early founders, and I'm guilty of this as well, I want to be the best painting company. Here's how we're going to do it. Here's how this is going to be. And then the customer experience is the afterthought. If you switch that framework around, you'll realize the amount of traction you get is probably better by a factor of 10 when you could speak the language of your customer and solve their pain points. That's a much easier play, but a lot of people look at that very last. And I think that lever right there is just something that is just wide open. And a lot of people just walk right past it without pulling that, without even realizing it.
Yeah, no, I think that's right. And I think especially for people who begin their life in a trade, and myself included, like I'm guilty of doing the same thing, which is, I started out as a designer and doing design work. And then I went into business to do design. Didn't really have that much to do with there being a need for designers. I mean, it turned out there was, but but that wasn't the point, right? That wasn't why I started the business. I started the business because I know how to design. So I designed. Right. And in your case, you knew how to property manage. So you started property managing, I think it's a common experience, especially for people who picked up a trade or learned how to do a thing or have some core competency. So I think that's a great observation to kind of look out and do other things. I also think one thing that does is it pushes people out of their comfort bubble a little bit. And I think that's where growth starts to happen. So you force people into, doing different things. And so in your case, you're discovering these problems that are customer problems, then addressing them through spinning up new organizations or R&D and things like that, but I think your average person, they're all doing this. Like, they're finding, even if you are just the plumber, what's the better way to do this? What's the better way to do that? Oh man, I do it my way, and my way is really efficient for the X reason. Oh, well, could you package that up? Could you make I don't know, an online course? Could you make, whatever? Right. Like, there's all kinds of things you could do with your own expertise. And, and especially once it's identified as a customer need somewhere along the way, I think it could be really useful. So, but I think that for especially solopreneurs, that's a really great observation.
Yeah, absolutely. And I'll add this last part to it too. Automate it, right? There's a lot of convenient things that you could put on autopilot that's going to save you hours that you don't realize, and your customer is going to appreciate it. Small things. And it's crazy that not everybody's already doing this in this day and age, but you'd be very surprised. Small things of like being able to pay an invoice online with a credit card, like sending automated, reminders and payment links and like alternative payment options. Well, the thing is, like when you use a software solution, a lot of these already have it built in, and that's the convenience. It's not just about the service you offer, so to say, it's everything attached to it as well. If you go to any of our websites, right, we don't necessarily reinvent the wheel, but we do things a little bit differently. If you go to apartmentpainters.com, there's a simple form submission on there to submit units in need of paint. And for us, our clients, they'll call us, and we love that so much. It's so easy to use. Thank you for doing that. For us, it was a simple just form that we affixed to the website. But when you look at how they currently do things in the industry that we play ball in, it's text messages, it's phone calls, it's trying to track down, hey, what's your guys' availability, whatever else it is. It doesn't need to be flashy. It doesn't need to be the most expensive thing ever. We pay $12 a month for our submission form on our website, and people say that's one of their favorite things about us because how easy it is. They have their phone in their hand already. They go to the website. It takes them 5 seconds to schedule services with us. They don't need to talk to anybody. They don't need to disrupt their day. They get an automatic reminder and confirmation, all those kind of things in real time. Those small things, that's what adds up to the customer experience. There's never one big button to hit. It's just a lot of small things.
Yeah, there's a great point in there too, which is, pay attention to your industry and understand what's going on in that place. Like I will say, I mean, and Mike can attest, this is the first episode in weeks that we haven't really had a conversation about AI. And it doesn't mean that AI isn't going to be a thing in your systems or, managing your data. Like, I mean, I'm sure you'll leverage those technologies as well.
Yeah.
But the point is, people that are in flooring aren't worried about chatbots. They're worried about, are you going to show up on time? Are you going to do the work properly? Are you licensed? Are you bonded? Are you whatever? Like they have different concerns, and it's not necessarily all tech. So I think for a lot of us who spend a lot of time in and around tech, it feels like all the world is just like we're all clamoring for AI and everybody is, just going to be outsourced by some bot. But the reality is, I mean, there's a lot of work like what you guys do specifically that, I guess until we have a fleet of Optimus robots one day, I mean, right now everybody is doing this work and these kind of tangible services are going to continue to be tangible for some time. And as advanced as we think people are, they will almost always disappoint. They're, like to the point you're just making about your form, just having a form, which has been, I don't know, technology since the dawn of the web. Like, that's one of the first things you learned how to build is a web form, so, it's not like this is high technology, but in your industry that the ability to do that, or to be able to send a text to rate your service or, whatever it is, any of these little technical touch points that are easy to learn and easy to adopt. That could be the extent of the technology needed for your industry. And I think it's a valuable observation to just kind of think about that, regardless of what your industry is, whatever work you're doing, that sometimes the shiny new bell and whistle isn't as valuable as either just maybe in your case, picking up the phone.
Right.
Yeah,
absolutely. And AI, obviously we look at it. I use AI every day. My scope is this around it. I think AI is great for empowering your own teams and increasing that experience. So to say, you said it well, like, unless there's a fleet of robots that come out, which I hope not, I hope that's not anytime soon. End of the day, these blue collar workers, these trades, they're always going to be there. And you made the analogy about the flooring company, the plumber, like AI can only drive so much. At the end of the day, it requires their hands to move in order to do a good service. And so, all those things said, I think AI has a place, and don't get me wrong, like we lean on technology and all those kind of things, but we frame it in the sense of we use it to empower versus replace. And it's very common right now. You replace need with AI. Sometimes that use case is probably really justified. And others, like in our space, it's impossible to have that mindset with it.
Yeah, and I think that's right. There's a ton of like kind of fear mongering going on that we're all being replaced and all this kind of stuff. And, and it very well could happen. I could see an Optimus style robot doing plumbing in the future.
I don't know.
Hopefully by then everybody's evolved to become techs for Optimus style robots or something. But, but nonetheless, I think that, at least for the short term, I think that, obviously hands are going to be really important. But I think more than anything, and this is maybe just, I'm sure Mike will roll his eyes here any moment, but the human relationship factor, I think, is still going to be a thing. And I think even as technology moves us past where we need maybe human interaction to accomplish job A, there's still going to be the human behind the thing, or you're going to want the human for whatever. Like, I think we're still going to have whatever that connection is. And I think human connection will be important. And in high touch businesses like what you guys are doing, where you've got a trade, where you're dispatching people who are doing things, and representing your company and the work they're doing, all that kind of stuff. Like, I think that the kind of trust and reputation, maybe one day in a sad, dark world, it'll all be replaced. But I think for a little while, we've got time to, it's still going to be kind of a people first world, I think.
Yeah,
I agree with that.
I feel that, like, in your industries in particular, even if they did have robots to do it, people are going to want the hand touch and the person who's going to take care and actually care about doing a good corner on their trim piece, or, the paint job doesn't have marks that, a robot would miss. There's things that they think they can automate, and they never will be able to get that actual human feel into it. So
I think there's always going to be room for craftsmen.
Yeah. So we're kind of at that time. Do you want to tell people how they can reach out, get in touch with you if they are interested in your service or just want to chat?
Yeah. Social wise, I'm most active on LinkedIn. Network with me there. Just Tyler Dunigan on LinkedIn. And website, all my companies are listed on TurnServe.com. Best way to get us. And send smoke signals and we'll respond. If you are a property manager or if you own a business and you're thinking about rolling it up onto our platform, we'd love to talk to you as well. But yeah, just reach out. As long as it's not an AI message, I'll respond to it.
Perfect. And there's no shortage of those these days. Well, thanks so much, Tyler. We really appreciate you taking the time to do this, man. It's awesome.
Yeah, it's great to meet you guys. This is fun.
Absolutely. And thanks so much to everybody who tunes into the show this week and every week. And we'll see you guys next time.